All right, folks, it's Friday. Last video of the day. Last time talking about trading today. Probably not, though. Let's be real. A few hours from now, I'll be thinking about Monday's session. But busy day, so I appreciate a lot of y'all tuning in both Wednesday morning and this morning for the pre-market prep. And for those of you interested, we'll be doing the YouTube live thing Monday, Wednesday, and Friday at 9 a.m. Eastern. Good 30 minutes of prep, talk about what we got to talk about. But what a week. I think the next few weeks here could be awesome. So, could be wrong, but I think we got some really good opportunity. Get you updated on a few things here. This is more so funny than anything. So, for NVIDIA, back late April 27th, so right here, in the options room, I sent out a trade alert for a 605 short strike put credit spread, and NVIDIA says, hey, nice trade, let me crap in your face. So that quickly came against us. We've been sitting on this position basically at max loss for the last couple of weeks here. And then this morning, I'm not Irish, but call it luck of the Irish, they announced a stock split. This freaking thing gaps up. We actually got rid of the spread at break even. So, long ride, a break-even ride, so not a profitable one, but believe me, to get back the 2% that we were risking here, I'll take that any day of the week. So, I'm only bringing this up because for those of you that trade spreads, there's going to be times when really quickly a position goes against you, and if you're looking at 90% of max loss, the reality is there's not much to salvage by buying back the position at that point, if you do have enough time to expiration. So, believe me, this rarely happens where something goes against you this much but then comes back in your favor. And obviously this was just BS luck. They announced a stock split, gaps up this morning, we're getting out of break even, but at least take that into consideration. You're looking at 90% of max loss if you got some time. More importantly, if you got confidence in your trading, well, screw that trade, let it go for now, go take advantage of the next best opportunity, make your money. And every now and then lightning strikes and the trade comes back for you. So not the profitable trade we were looking for back in April, but break even is better than a stick in the eye. So listen, gang, in Sunday's video, I'll get into the dirty details of a focus list and all that good jazz. Here's my suggestion. Every weekend, I'd like to give you a little bit of homework. Build a focus list of the best setups you can find, because we got a daily squeeze here for the S&P 500. So, of course, the market's going to do whatever the heck it wants to do. But in terms of probabilities, if there's ever a time to get aggressive with your swing trades, and aggressive within the realms of responsibility. Don't be throwing your whole account at crap here. But if there's ever a time to get aggressive, it's when you got a daily squeeze in the S&P 500 or the Qs, because as goes the market, goes pretty much everything in the market. And the best time to swing trade is when you got that wind at your back. So with the structure here, the squeeze in the SPY, as long as we hold structure, my mindset is over the next 1 to 2 weeks, I think we can get a move back into brand new all-time highs, right around plus 2 ATR, maybe even plus 3. But I'm looking for a move to the upside. Simple as that. So the question is, how do you look to get positioned for that potential burst of momentum? So it's all about the structure. Even if you don't got a squeeze in the SPY, you still want to focus on swing trading those setups that have the highest probability of making a move higher. And that probability, it exponentially goes through the roof when you got a squeeze here in the overall market, because you got the wind at your back. So that's a move I'm looking for the market as far as where I want to get positioned. And we'll get into the details on Sunday. But, from one perspective, technology's been lagging behind. The semiconductors have been lagging behind. From a weekly charts perspective, though, the Qs still look really solid. The uptrend is still very much intact. You got stacked EMA'S, and all we've really done this week is pull back to the 21. And as far as the ebbs and flows of the market goes, it actually makes a little bit of sense, right? Big push into plus 2, plus 3. It's typically where we run out of gas. We typically pull back right to the 21. And as long as you hold structure there, it might take a week, 2 weeks, but if you hold structure and support, you're looking for a move off that weekly 21 back towards the upside. So we ran about plus 2 ATR, pulled back to where we should pull back to, and we found support where we should found support. So doesn't mean the Qs get ripping here immediately, but as long as we're maintaining action above that weekly 21, I do think over the next 2 to 3 weeks here, along with the overall market, there's a potential for tech to go higher. So the weekly chart is still bullish. The daily chart is what's going to keep me a little bit patient. If we can't hold above that 21, there's all the potential in the world. We crap right back to the downside. If we can hold here, a couple of days of solid action, holding above the 21, I would love to see the moving averages get stacked positively again. But if we can hold support here, I do think with the S&P 500, QQQ and the tech stocks could come out and play along, and I think you can get a move into +2 ATR, call it a brand new all-time high here as well. So be patient. Let's see if we can get some support. But as far as what to trade within tech, it's got to be about a high probability structure. So Amazon, and if you're a subscriber, you know I love me some Amazon. I don't love this chart right now. No daily squeeze, no stacked EMA'S. I don't care what the SPY looks like. I don't really care what the Qs look like. No setup, no trade. So I don't like Microsoft either. No squeeze, no stacked EMA'S, no trade. So believe me, if the Qs do end up partying along here with the overall market, and they do make that +2 ATR move into new highs, everything's going with it. Microsoft's going higher, Facebook's going higher, Google's going higher, but I want to look to take advantage of that potential momentum on a chart that all on its own already has the kind of structure that points towards a move towards the upside. Google has that structure. Good looking daily squeeze, get the positively stacked moving averages, and it held up really well this week. So counting their channels here, yellow is +1 -1, purple is +2 -2, red +3 -3. This is what a stock should do throughout a squeeze. Hold up between +1 and -1. It's just noise, but it's holding structure. So Google looks exactly like it does, or like it did rather, back here in March, April. Good looking daily squeeze, it held structure, but it kind of chopped itself silly until ultimately it had the wind of the overall market behind its back. So if we can get some wind coming in here, I think Google's good for a move back into at least 2,400, right near those recent highs. So you're going to need to see the squeeze fire along in the SPY, and you're going to need to see the Qs join the party for Google to make that move, but you got to love the structure there. So Google versus Amazon, it's Google all day long, and then Facebook, here's the structure as well. So what we're trying to do is you find that high probability structure to the individual stock, but then when you can time it with a bigger picture move in the market, which is usually pretty easy once the market's got a squeeze, you're stacking probabilities. So that's the scoop there for technology. Weekly chart still looks good. Give me some solid, legitimate action above the 21, and then I'll be a bit more convinced we can make a move back towards the highs. And if we do, Google and Facebook, those are the kind of charts I'd like to trade. But outside of technology, we know what's been leading this market. It's not tech, it's not semis, it's been the financials, it's been the energy sector, it's been the industrial sector, it's been the transports. That's where the leadership has been. So now with the squeeze here in the S&P 500, if the squeeze fires long, if we're making a move into brand new all-time highs, +2, +3, sure, technology and the semiconductors, they might pull an Undertaker and rise from the dead and join the party, but what should also be leading the way still is the industrials, the financials, the energies, the transports, the sectors that have been already looking good here. But even still, it's about the structure. So I'm looking for a week or 2 weeks here momentum for the overall market. I want to plant my seeds in the best looking setups possible. So sure, daily squeeze for the S&P 500 fires long. The financials have been strong. They probably continue to be strong and go higher. There's no daily squeeze here. There's no trade for me. Energy probably keeps going higher with the overall market. No daily squeeze, no trade for me. So what I do like is the industrial sector. You got the daily squeeze, you got the stacked EMA'S, and then within the industrial sector, if you look at the individual stocks, Caterpillar, beautiful structure. So we still got the put credit spreads from the options room in CAT. We actually added to that position this week. Good looking structure to CAT. For CAT, I'm looking for a move into 248. I think you can't go wrong with Triple M here either. That's a good looking structure. But think about what I'm trying to do here from a probabilities perspective. Big picture thinking, with a daily squeeze in the S&P 500, based on the structure, there's already a good probability here that stocks across the board could make a move to the upside should the squeeze fire long. As goes the market, goes the stocks. So as far as a swing trader's perspective, looking for a move to the upside, that's the one thing working in our favor right now. Then if you dial it down to looking for that momentum in a sector that all on its own, ignore the fact the SPY has a squeeze here, all on its own, the industrials have the kind of structure where there's a good probability of a move to the upside. So you got that working in your favor, and you dial it down a little bit more if you find an individual stock that all on its own, don't take into consideration the daily squeeze in the SPY, don't even take into consideration the daily squeeze in the industrials, but all on its own here, Caterpillar has that kind of structure where there's a pretty good chance to get a move back towards, call it 248. We're trying to stack probabilities. So to me, this Caterpillar position, I'm going to be happy as a clam if this trade doesn't work, because this is what I want to focus on trading, trying to stack those probabilities. All on its own, that's a kind of structure where there's a good probability of a move towards the upside. Then take into consideration that that stock with that structure belongs to a sector that also has a structure that points towards a move to the upside. And now take into consideration at the same time, the overall market has a structure that points towards a good chance of a move towards the upside. You're stacking probabilities. So for me, the best time to trade is when you got a squeeze in the overall market. It's what we got here. That's what I'm looking for. So in Sunday's video, we'll get into the specifics of, the actual Google position, the Caterpillar position, a few other trades I think you can take into consideration because there's some good looking stuff out there. Real estate looks good, so I think I'm going to be working an order there next week. But that's your homework assignment for the next 2 nights here. You know my favorite setup. You know my pre-flight checklist. Yours might be a little bit different, but regardless, run your scans, do your homework, do what you got to do. Put together a focus list of 2 to 3 to 4 super clean setups that all on their own, based on their structure, have a high probability of a move higher. And now is the time to look to get positioned in those setups because of the squeeze here in the SPY. Make sense? I hope so. So I appreciate you. I hope you have a good weekend. I'm already looking forward to Sunday's video, and I'm looking forward to Monday morning's prep. But if you haven't already and you're enjoying the videos, go on ahead and subscribe. Also, check out my fam over at Simpler Trading, simplertrading.com, and obviously, Simpler Trading here on YouTube. And if you want the long version of the Sunday video, go on ahead and subscribe to the newsletter, and you'll have the link in the description to do so. But I appreciate the heck out of you. Talking to you soon. Be safe.